Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
What's happening in the markets right now? We had a spectacular week for IPOs. Nobody thought that we would collect so much money in IPOs. The entire IPO process happens very quickly these days. From the date of opening to listing is about 7 days. And we are talking about further shortening this period over the next few years. Essentially, we are creating a certain welcomeness in the capital market towards investors participating in IPOs. But when you have such huge sums of money running into lakhs of crores getting channeled in a week's time into IPOs, you got to understand one thing, that money is not just coming out of bank accounts. That money is also coming out of demat accounts. People are selling shares to apply in IPOs. So when the money comes out of existing portfolios of people through sale of shares, once the allotment process is completed, the unallocated money has to once again go back into the portfolios. Nobody wants to idle money. So when they do that, money has to be deployed very quickly after a spate of IPOs. And that redeployment has to happen into people's portfolios. So people are going to be always hurrying to reinvest money. And we are seeing that this week. And would they reinvest the money in the same shares which they sold earlier? Probably not. Who would buy a stock which is sold a week ago once the money comes back from an IPO? He wouldn't do that, right? So what would we do? What would you do? We would apply ourselves to newer ideas and try to find something different and new to buy and position in our portfolio. So people are looking around to find companies which are relatively attractive. We are in a market where most companies are not so attractive, but people would always look to find some companies which are relatively attractive into which they can deploy the cash that they get after IPOs are over. And that money gets deployed in newer ideas which look relatively more attractive to us. So what we now see after this spate of IPOs is a rotational trade where we are looking at relative valuation of companies and trying to identify some companies which are relatively not so expensive and putting our money in them. Smarter ones may find cheap stocks in any market, but that's not easy for the average investor. So the average investor would possibly do some rotation and invest in parts of the market which have not gone up that much. Effectively, we don't want to idle money. That's what one sees in the market. That's the most important thing going on in the market. People want to be fully invested and they want to experiment in IPOs. They want to experiment in newer ideas, in new age businesses, in the hope that these companies would do extremely well over the medium term. So the IPO boom as well as the reinvestment of refund monies from IPOs are both hope trades in different ways. So the market knows it doesn't have too many attractive ideas, it accepts it and moves on to buying ideas which are relatively somewhat more attractive. This hope trade should go on for some time until you have an event or you have very adverse flows out of India or you see investor fatigue. I don't see investor fatigue coming anytime soon, so it should be either an event or flows. Until then, people are going to be in very strong state of FOMO. They don't want to miss out on anything, and so they would be always hurrying to invest money into equities. This kind of a market is not an easy market to invest in if you're a value investor. It's not an easy market even if you're a contrarian investor, because all the contrarian ideas get bought very quickly. So it's a market to sit, observe, and clearly understand what fast paced money is doing. So understand where this money is going, where it's coming from, what kind of decisions it is making, which of these decisions could potentially be mistakes, which of these decisions will go right, and form opinions without rushing into judgments, and test these opinions over months. When you have nothing much to do in the market, you can always understand and try to sharpen your perspective of the market, of valuations, and of opportunities. I think this is a good time to do that. Thank you for watching this video.